Welcome guys to BeyondTheHudl.com, where we show you how to become a smarter trader by combining the power of on-chain data and smart money analysis to gain a greater edge in the cryptocurrency market. Today, I want to walk you through Bitcoin, and I will be analyzing why we were bearish in April and why we have not taken a trade since April 18th. I'm just going to very briefly go through it. This video is not to go too deep into every single tool that I used, but I will show you the most important one, and it has to do with identifying the very, very large traders in this market and trying to trade with them, right? Again, the keyword there is trying. Sometimes you might misinterpret it, but if you can get it right most of the time, you will be able to stay out of the way out of big moves like this 57% rally or drop that we were able to not get caught up on. So with that being said, let's get started. Okay guys, so before we get started talking about price, I want to get you guys starting to think the way we are. And something that we found has worked very well in this market, not just in crypto but in our forex trading, is instead of looking at price first, we want to start looking at the overall health of the market. So we call this the anticipatory stage of trading. Okay. And in this anticipatory stage, you're much less worried about your patterns, your bullish pennants, trend lines, indicators, whatever has to do with the price chart. You're less worried about that and more worried about, which by the way, we don't use any of that, right? As you guys know, but we're less worried about that type of stuff. And we're more worried about, is the market overvalued, undervalued? What part of the cycle are we in? You guys hear people talk about cycles all the time. And this is really important because it sort of kind of gives you the sentiment, right? You're trying to gauge to see whether you're supposed to be leaning more towards bullish, more towards aggressively bullish, right? If you know you're at a part where everyone's feeling a lot of pain, and maybe you want to get more aggressive. If I know I'm at a part where, like right here, we had been going up for what? A year and 3 months, right? A year and 1 month, right? Because the market peaked in April. And it bottomed out in March of 2020. So if I know for the past 13 months the market had been going higher, and this is like a 1,500% move or something crazy like that, yeah, 1,600% move, then it's probably a time for me to look for the market to start, not be as overheated. So anyways, that's kind of like how you want to be thinking at the beginning. Now you have to see, okay, fine. So how do I do that, right? Well, some people use on-chain. Some people use, actually something you're going to hear us talk about every single week, and it's going to be the Commitment of Traders report, guys. This is one of the best tools I've ever found in this entire market, both for Forex and for crypto. And at the moment, with the way we look at it, we think we may have found something very, very powerful here. Now, I'm not going to go too deep into it. I'm not going to completely break it down. We are saving that for a course and all that good stuff. But we will be following this every single week, and you guys will get to see exactly how we use it. So what is the COT, right? So essentially, right here, it says the Commitment of Futures Trading Commission publishes the Commitment of Traders report, which helps the public understand the market dynamics. So it's really interesting. This is really, a lot of people like to say the government doesn't do anything for us, but this is one of the good things that the government has done for the little guy. Because they make these large traders, these large institutions have to report their positions every single Friday. So essentially, by studying these reports that come in every single week and studying these traders that are found inside of it, we were able to sort of dissect and find out who we should be following, right? And that's what I'm trying to say. So now it's no longer, oh, I think there's a chart pattern, there's my supply zone, there's my demand zone, there's my premium, there's my discount. I think there's going to be a large buyer there. Now it's, oh no, we can see that the large players have been buying, right? We can see that the large players have been selling. Now, obviously, these large players I'm talking about only encompasses the U.S. futures market as traded in the COBE and the CME, but obviously these guys are highly trained professionals that have large teams of people with very smart people working to get these markets right. So again, my mantra has always been, instead of you having to do all the heavy lifting and keep track of all the news and all that good stuff, why don't you let the smart money do it? You just try to pinpoint when they're buying. You try to buy with them, right? And that's what I keep saying, trying, right? Because you can always misinterpret the data. But again, I think we have finally, come into something good that can help us out here. So essentially, every single week you're going to get this data, right? And then you can go, find it yourselves if you guys want. It's right here in the cftc.gov. You just come here to market data and economic analysis. You go to commitment of traders. And then the way it works is you can play around with whatever ones you guys want to look at. So if I go here to the CME and I go to the long format, I'm just going to show how it comes out. You see, it doesn't look very sexy. It doesn't look like something that most people would look at. But I'm telling you, if you want a great edge in this market, whether it's commodities, currencies, so even stocks, you come here, okay? So we were able to take this data and then we were able to put it on TradingView. So essentially, now we can visualize the data and try to decipher it every single week. And that's why my most anticipated day of the entire week is Fridays. I love Fridays because I get to see, the market moved X way. Now, how did the data come out, right? Because the data releases from Tuesday to Tuesday, so I can almost confirm whatever that Tuesday to the previous Tuesday move was based on that data. If the market moved down, I'm like, oh, okay, well, did they keep adding shorts, right, to support the down movement? Oh, did the market move up? Oh, well, should I then be trying to reverse my short position? That type of stuff. So you can start to see how this gets really exciting very, very quickly, because you're no longer doing it based on what you think you see on the chart. This is hard proof. So right here, you can see real quick that we're below the zero line. So that means that we have an overall short position on the players that we follow here. So that means that, yes, they do still have some longs in the market, but they're mostly short. And as you can see here, they've been mostly short ever since the beginning of January, right? This blue line right here, that's their net position. It started to decline. And this, so any white lines is the average. Anytime you see anything white is always the average. So you can see that their actual net position had gone below the average. So what that's telling me is we might start to decline and go below the zero line. So although they have a bullish position as market goes higher, you have to be very attentive because at some point that bullish position, that overall bullish position was going to switch to bearish, right? And lo and behold, as you can see right here in early February, and I remember I had made a video for a group in our community, and I showed them this. Now again, I didn't publish it. It's unlisted on YouTube. I didn't publish it for everyone because Misha and I didn't know if the COT worked for crypto the way it works, the way we've been using it in Forex all this time. So it took us time to study it and have to go through it real time and see moves happen in order to see. And by January of this year, we pretty much knew that it worked very, very well. So now that we're confident and we want to show it to you guys, to the rest of the world. So as you can see here, back in February 7th, the net position went below, but then the next week after that, it quickly went above it. And that's kind of like the times where things might get a little confusing because this is our important area and they were messing around back and forth. Now, the very next week after that, they went back below. So when they went back below, that was a huge red alert for me, like, holy crap, like, they're officially net short, right? These are large players, and they're net short. So their shorts have now gone above their longs. Now look at where price was at that moment in time. If you look at price when, so let me get rid of some of these here, so you guys can see it better. There we go. So when this net position here went net short, we were here right before the huge 21% weak candle. I'm sure we all remember that one. Now again, the way it works here is the anticipatory stage gives you like sort of how your macro position, your sentiment. So this up move higher here didn't make sense to me. Although I still understood based on price, you want to be long. The smart money was telling me, hey, I'm selling as price goes higher. So eventually I'm going to peak. So as soon as this down move happened, I was like, oh, damn, this is actually going to be the high. Well, lo and behold, we did not get the price action signal that I was looking for, so I couldn't confirm it was going to be the high. And then, boom, we went one more move higher, and then, boom, one more move higher during this entire time. What were we doing? Well, we were buying BCH and XLM. We made a ton of profit on BCH. I think it was one of our best trades. 117% on that trade. It was a stellar trade, and our portfolio was 50-50. I mean, we had 50% XLM, 50% BCH, so we made a killing on that trade. And then, of course, XLM, we didn't, quite capture the entire 70% move. I remember that when this drop here happened, there was a crazy move in the market, and we got stopped out for a 30% gain on that one. So definitely could have performed better, but it's okay. It's okay, because we knew by April, on April 18th, so I posted this on the 19th, but on April 18th at night, that same night, I remember, all right, so we finally got our bearish price action signal. This might be the high. Now check out what happened after that, guys. If we use our then price action, right? Now look, you're already net bearish that entire time. You see, you stayed net bearish. You tried to test it one more time, and that's exactly as we were trying to make a new high. We rejected, and we're like, all right, that's it. And look what happened afterwards. More bearish, more bearish, more bearish, more bearish. So that's essentially, sort of like how we knew how the, why this high was going to be formed. And as you can see right here, swing low, swing high. Now, when this rally right here happened, we were kind of thinking to ourselves, you can see right here, you see how when the market rallied, the positions, again, you were still below the zero line, so your net short, they have more shorts open than longs, and their net position was below the average. That's super bearish. So I was telling to myself, there is absolutely no way that this is not a sell signal. And as you can see here, let's see if we can find it. And we will go over this as well. But I was basically thinking I got to tell Twitter about this, right? Again, I wasn't ready to talk about the COT yet, but we were definitely ready to talk to you guys about the sell. And of course, what was our target? Well, where we are at prices right now, 33K to 36K right here, the nearest range. And we've been talking about this since April 23rd, guys. I mean, it's not anything new. But it was all because we understood the COT and how very specific players within that COT were positioned. And don't worry, we will be making this video every single week. I believe me and Misha agreed that he was going to review it during the weekends, and then I would make this video for you guys. At the moment, what we have in the process is a Bitcoin video and then an altcoin video separate the next day after. So this will be your Tuesday video. Let's see if I can stick to it. And then on Tuesdays, on Wednesdays, you're gonna have your altcoin, which will be Ethereum and some DeFi coins that we might like and stuff like that. I'm trying to find the other picture of the move, but I do not seem to find it, guys. Oh, here it is. So look at this. You see right here? That was your swing high. That was your swing low. And you see it touched it once, touched it twice, 3, 4, 5, 6, 7 times. I remember it spent 2 weeks at this high, and I'm like, dude, what's happening here, right? If we break above the 59K, I was really happy when it hit it the first time here, and then it came back, and I'm like, okay, maybe I'm wrong. Maybe these COT traders, maybe these large positions just don't know what they're talking about. But lo and behold, after you had that move right there, and that's when I was talking to you guys this is the phase 3, right? See, buckle up. If this is the step number 3, we're gonna enter the expansion phase, and it'll be really ugly. But again, it followed our quarterly model. So now that you guys understand sort of how we were able to think about this bearish move and why we were thinking about this based on the positions of these players, let's go ahead and talk about price. Okay, remember, anticipatory stage, and then you go look at price. So I'm going to keep the price really simple. You already saw me use the premium and discount model, right? There was the supply here that I think it just got hit. I'm not going to mark it out. You can do that on your own. But what I really want to focus on, and one of the things that really helped me, that guided me through this entire model here, is the SMPDT. And this is so beautiful, guys. So on April 23rd, I tweeted this right here. And I said that my current bias, was bearish. And again, you never really know if you're going to break support until you hit it, and obviously you break it. So the best you could do is try to follow your models. Now, the model is really simple. You look at a candle, and you try to see, you try to predict how that candle is going to close. So in my opinion, my opinion, because of the way that the large players were positioned, right? Remember, we just showed you why they were bearish, because you're below the net position. And I didn't show you guys all the other lines, but we can go over them as well later. You know, as the weeks go, you'll get to know. So this is the individual positions. So that's their longs, and these are their shorts. And this is how long and percentage-wise they are, or how short they are. But again, we'll talk about that in the future. What I want you guys to focus on right now is this line right here, because it's very, very important. Okay, this helped me, along with the COT, not be in on this move, and it saved me a ton of money. So right here, if I go back to my weekly chart, can you see how this line correlates perfectly with the line that I showed you guys here? Well, I'm not in that tweet anymore, but remember that swing high, swing low? Look at that. That's your quarterly open. So the idea is, if this candle is going to close bearish, you're going to use the quarterly open as resistance. Well, that was the high. We saw the smart money right here. We saw them lessen their position. You see it's going lower and lower and lower. And then you finally went below the quarterly open. As soon as that happened, it was this big red flag, and I just had to tweet about it. And then the minute it came back into it, you're still below your average net position as you're declining more, and you know your overall position is short. So when that happens and you're still below the quarterly open, and I'm expecting the quarterly candle to close bearish, we're going to hit the expansion phase. And now, what are we at? Well, there's only like, what, 8 days left of the quarter, not just a month, but the quarter. So now, this quarterly candle is going to close bearish. You see? That's why I said back in May. So think about this. In April, I was already saying, if the April candle closes bearish, I'm bearish in May. And then I said, if the May candle closes bearish, I'm going to be bearish. Why? So again, using SMPDT, the moment we went below, so you can see right here, it kind of overlaps at the very beginning of the quarter. You also have your monthly SMPDT. So I was predicting the month of April is going to be bearish based on the COT that we just talked about, and I was expecting the quarter to be bearish. So that's why I expected May to be bearish, and now I expect June to be bearish. You see, so this little up side right here, I just took it as the top side wick. So actually, I don't have to mark it out because I have it right here. So right there, yep. So you can see right here, if I go back to my daily chart, well, that's too many lines. Let's get rid of this again, yeah. So if you can look right here at the monthly open, look what we did. We went above the monthly open, swing high, swing low. That's a sell right there, right at the supply. We sell off, we come back up, use it as resistance. Honestly, when this happened, I was a little bit worried, but I do have some more resistance stuff that I used over here based on, you know, some stuff we've shown in our mastery course. And then we were able to not get into the market because, again, if this quarterly candle is going to close bearish, then you expect some sort of resistance levels within this trend right here, right, within this price leg, to make the price stop right there. Lo and behold, price stopped, and now you're below the monthly open. So as long as I'm below the monthly open, right here, this is the weekly open, the orange line, I have absolutely zero need, zero intention to want to be buyer, right? Because there's only 8 days left in the month. Why am I trying to buy the bottom side wick, right? And that's what I've been saying in my tweets. Like, don't try to buy the bottom side wick. So right here, use SMPDT to figure out how you expect the weekly and monthly candles to close. I mean, if you were following my tweets since April 23rd, this is a gold mine for you. You would have saved yourself a 40% drop or a 50% drop. So if I expect this week and this month to be bearish, then if I'm in the expansion phase, I don't buy up moves, right? If I decide the bottom candles or the candles are going to close bearish, you don't buy that bottom side wick, right? You don't buy the up move because that forms the wick, and that's exactly it. Look at this, right? Anyone who tried buying back in April, anyone who tried buying this wick right here, yeah, okay, cool. You made a nice 22%, but you're huddling the market anyway, so you're not going to take profit when April closes, right? You're going to be looking for new all-time highs. Well, guess what? You got crushed. Why? Because May opened up, used the resistance of what? Of April's monthly open, which is also the quarterly open, and because of the COT, how that was positioned, and how the structure all flowed, you were already bearish. So look at this. Now you're going to expand lower. After a 48% move, what do you think is going to happen, guys? You're, of course, going to get a retracement. So you get another 24% retracement, but you're not supposed to buy it. Why? Because my quarterly candle is expected to close bearish. So if it's expected to close bearish, and I'm already in the second month of I'm already about to open the third month of the quarterly candle, there's a lot of resistance within that quarterly candle, right? A lot of selling from the smart money that we saw here, that they're not going to let this candle close bullish. So again, that's what I said. Sell in April, walk away. You don't have to look at it in May. You don't have to look at it in June unless something happens and the candle breaks some important resistance levels. So that's kind of my overview, guys, as to, again, using two different tools. That's all we really used. I know I talked about premiums and discounts, selling the premium twice, using the quarterly opens as resistance, but really we only used two tools here. The first tool was the COT. We wanted to see how the smart money was positioned, and then the second tool was we used the SMPDT, and that's really important. Again, I said the month of April was going to close bearish, so then I didn't want to be buying rallies. I said the month of May was going to be bearish, and the month of June. And the reason I said that is because when you look at the quarterly candle, again, months make up quarters. Let's take a moment to think about what's going to happen next. Okay, guys, so now that we have an idea as to how we got to the point that we are now and what tools we're using what two tools we used to analyze this drop, among many others, right? We're going to go back to the beginning of the strategy, right, the idea, and we're going to go back to using those two tools, the SMPDT and the COT, right, in order to predict what the market might do next. So again, the anticipatory stage tells us that we should start with the COT. So if we start with the COT, we want to go back to the weekly, and remember, for those of you that want to look at it by yourself, you can go here, market data, commitment of traders, and then go find the Bitcoin one. And there's the CME or the CBOE. You can go take a look at those. Or you could wait for us to go over the market every single week with our indicators, okay? So what this is telling us right now is quite interesting because, again, this is the first time we're seeing the Bitcoin net positioning, this first indicator here, go above its average since the high, right? Well, not even since the high, since January, right? The first time it's going above its average. So that means that the net positions are now starting to increase, right? They're starting to get less bearish. Okay, so that's interesting to me because it happened twice already. It happened a couple weeks ago after we made the low, the big spike low, and now it's happening again. That's pretty bullish. This is the first time, guys, it's happened since January. And that's why I was telling you earlier in the video that this entire run up, although we were still long, we were super cautious at every turn because we were trading against the whales, against the smart money, right? The people who are more informed than us. So let's take a look at their individual positions. Now, if we look at their individual positions, they are above average. Now you can see right here, again, below average, and they haven't really gone high, too high ever since February, right? So this is really important that they're finally above their average. Another important thing is, so you can see right here kind of how it happened last March, right? When March made the low, they started increasing their positions, and then they finally went above their average sometime early April, right? As far as their short positions, it's really important to also see how their short positions are doing, because remember, it's not as simple as just, oh, look, what's their net position doing? You get more insight by seeing what their longs are doing and what their shorts are doing. And again, if that doesn't make much sense, we will explain it on weeks. As you watch more of these videos, you'll get more and more practice with it. But check this out. Although their short positions are less than average, which is really important, as you can see, their shorts went insane in April, and that's what led to this April move there, and then this May move here. You can see that now they're starting to take profit, but look, we're still above, well, we just went below some of the highest we've ever had. And guess when that was? That was back in August. And in August, we all remember what happened in August because that was this drop right here. Now, let's take a little time out in explaining what we're going to do in the future. And if you guys have been following me for a while, remember, I was not talking about COT back in the day because we weren't sure if this was useful in this market. But check this out. I remember very, very clearly calling for a high here. And this is exactly why I'm trying to say this is very important to use this and follow the smart money, because I was looking for a high somewhere around 12,000, 11.8K. And obviously when it broke it on this weekly candle, then I turned bullish and I bought altcoins, not Bitcoin, but altcoins. But guess what, guys? Had I been using the COT, right? Had I been following the smart money and not just using price patterns that I can misinterpret, of course I can misinterpret this data too, but if it's bullish, it's bullish, right? If you're above the zero line, there's no way I can mistake it being above the zero line. I can misinterpret them being above the zero line and then something else that then makes it a little bit bearish. But they were above the zero line. Their longs were starting to go above average. And look at these shorts, man. These shorts were below average until the beginning of January. So this entire time, from September to the beginning of January, you would have been bullish. And right there. So again, we saw this drop coming. Why? Look at their shorts. They're above average. Look at their longs. They were below average. And look at the net position. It very briefly went from net long, right? Very briefly went from net long to going below their average and then net negative. So they held a huge net negative position starting that week right there. And remember, this is not a timing tool. You have to use this in confluence with price action. And just with price action alone, we were able to call this drop. We didn't get the low because we expected more bearish price action. Had I been using the COT, man, I would have bought the very low or near the very low. And, you know, wonderful 500% move higher. Now, you would have started to get a little bit worried and bearish around January, but you didn't get a price action signal, right? You didn't get it until April, which is when we decided to get completely out of the market. So using that same idea, when you use it on current price, you can start to see why this is the first time they're adding longs above average. We're still not net long, but and remember, these are things that I've developed while looking at the COT over long periods of time and studying it really, really long periods of time. And what I think they do is that when they're below the net long, below the zero line, while they're still net short, they'll trick the market into thinking they're going to keep going short, but then they'll actually be accumulating longs, right? Because this is full public data that anyone can use, and when things are public and anyone can see it, they start to mess around and play games with you, right? So then you can't exactly tell what they're doing because now you'll take profits away from them. So right now we are starting to see some bullishness, you know, and we're just waiting for the price action signal. Now it's really important because the SMPDT says if this yearly candle is going to close bullish, we will stay above the yearly open. So this is super important. We just hit it today. If we go to a 4-hour chart, you see this spike here? We hit it right there. So if I draw a line here, look at that. It's like a perfect hit to the yearly open. And now that's $29,000. So we're very attentive in this area, but I don't want to be taking positions in June. Why? Because remember, I already said June's going to close bearish. So I expect the monthly open of June to be used as resistance, and I expect the quarter to close bearish. So in 8 days, the quarter closes, a new one opens, and then that one has the possibility to close bullish, right? And then the month of July will have the possibility to close bullish. So we're starting to see the backdrop of bullishness, guys. I'm pretty excited. This is the best thing I've ever seen to be able to call tops and bottoms. Again, sometimes you get the signal a little bit late. Like I think here you got it like 3 weeks late, but you were still pretty close to the low right here. I'm sorry, right here. In the March drop, I think you got it in April. But that was, you know, relatively close. You definitely got it here at the very low. And it came in, the signal came in early. It came in February, and they had started to decrease their longs in January and add shorts in January. So again, there is a little bit of a lag at times. So it's very important to use proper technical analysis, the way we do here at BeyondTheHodl.com, right? Smart money analysis, not indicators or trend lines or whatever, although I'm sure, you know, it could work. So that's what I'm doing, guys. We're going to take it week by week. Am I saying this is the low? Absolutely not. Again, I don't want to make any real true decisions in this market until the open of the next quarter. So with that being said, I hope you guys learned something. I have a very large excitement about the COT and kind of how it's improved our trading. So week in and week out, you guys are going to see us do this. I think Misha will be doing the videos on the weekends, analyzing what the data was and how we're looking at it for the upcoming week. And then I'll be doing then the Tuesday Bitcoin analysis and then the Wednesday Ethereum and altcoin analysis, guys. So with that being said, have a great day and we will talk soon. Make sure to like, thumbs up, and subscribe if you found some value in this. And feel free to share it with friends or family. Okay, have a great day, guys.